you gonna film me?
You're on. Go for it. People watch this. You know what? You get a lot of people in metal that watch this around the world. That's right. And it's interesting. Tim Draper's like the first to watch it. Draper, yeah. No.
All right, so the way we usually do this, as some of you know, is we break it down into sort of world economy, U.S., and individual companies. And there's a lot of stuff this week, but I'm going to go pretty fast. One that I thought, and some of this has to do with the individual investing that my partners and I do, and opportunities we see that maybe the fund can't do. One thing that was really big news to me this week is that an ETF, if most of you know what ETFs are, right, exchange traded funds, an exchange traded fund has been started by Van Eck, which is a very reputable firm, to mimic the Class 8 shares in China. And the reason that's really important is because, I should say Class A, is you cannot trade in Chinese stocks today, at least the Class A shares, unless you're a Chinese native. You can trade in some other shares which are traded on the Hong Kong Stock Exchange. But those tend to, frankly, not be as lucrative for people. So what they've done is it's a U.S. business, but what they've done is they've used, and they don't explain how, but they use some sort of derivative contracts to mimic the performance of something called the CSI, which is kind of like the NASDAQ of the China A stocks. And so I've been looking at this ETF and wondering if it was going to be something I'd want to do. What I do find interesting about it, by the way, is if you look at how it's weighted, it's market cap weighted, and the challenge, I would say, in putting your money into it right now, even though you definitely want exposure to China if you're an investor. The interesting thing about it is, at the peak of the U.S. market before we collapsed, the S&P 500 had, in terms of the financials, the category of financials, right, different verticals, consumer products, healthcare, financials, the financial category was weighted about 25% of the total market cap of the S&P 500, when it represented about 12% of the economic value in the U.S. So it was about 2x overrepresented. It should have been assigned. We didn't see it. We all lost our money. In China, that's probably around 5 or 6% of the economic value generated in China from banking, and the financial sector is 34% of the sector. Of the market cap. From that perspective, I would say, look out below a little. But if you want exposure, you now get it. And this is something, hopefully, that will lead the Chinese government to ultimately say, all right, since people have found a way to weasel their way into these stocks, we should let it open for everybody.
How do we get involved with that?
The ETF?
Yeah.
You just buy the ETF. It's going to be exchange traded on NYSE, right? So very cool. Another interesting tidbit from my perspective was, anytime you see France doing anything to rein in unions, you got to say that's an important milestone. So Sarkozy this week said, hey, we're going to raise the retirement age from 60 to 62. As you can imagine, they started burning tires and everything else in France. But that's a really important sign.
They're still on strike.
No. They've been on strike since I was a year at Disney. They never go off.
Students have actually done that and realized that by doing that, they have more money for being students.
No, but they're still on strike. As a matter of fact, I know Rob Meadows was just out there. There's no transportation now, and apparently the strike lasts till Monday. Charles de Gaulle Airport has to close because there's no gasoline getting to the airport.
Wow. Okay. So that's going to end. But just the fact that Sarkozy is saying we got to do something, to me means, the EU may not all be crumbling around us. Also in France, Jerome Curveil, you may remember him. He's the guy who lost $7 billion in like a trade for SocGen. This is amazing to me, the differences between the U.S. and the rest of the world in terms of how we punish people. So he loses $7 billion, and if Société Générale hadn't been bailed up by the federal government of France, it would have gone bankrupt. And he gets 3 years.
But he's got to pay back $6 billion, which is interesting, not $7 billion.
Right. Yeah, he gets a mulligan on $1 billion. So, right. Just compare that to the U.S. and when people lose a few $100 million, they usually do about 25 years. I just found that quite fascinating. Other stuff on the economic side of things. For a long, long time, a lot of people have been saying the U.S. economy is slowing down, and it's not going to go into a double-dip recession, but it's getting close. So I've read that Q3 is going to be somewhere between 1.2 and 1.5%. Really, really slow growth, right? I bring this up every week with my partners because I just don't understand what we're thinking in the federal government. We still have a projection in the federal government, our budget, for the economy to grow next year 4%. And that leads to how much we're going to spend in terms of deficit, receipts. I mean, we're 3x slower than that right now. So what are we going to do? I don't know. Lastly, on this big economic side of things, mortgages. I found this very interesting. In 2005, less than 1% of mortgages went into foreclosure after 24 months of seasoning. And right now it's 11%. Wow, that's a lot. To your point about all that. Also on the mortgage front this week, I'm sure some of you read about the scandal with mortgages and banks putting a moratorium on foreclosures. I do find this fascinating, though I think it's a red herring. But the whole issue there revolves around how you get a mortgage to how you foreclose on a mortgage. And as it turns out, they had all these banks basically lied about one thing. It's a paper thing, but it still is kind of important. In order to foreclose, you have to sign an affidavit saying, I looked at the original loan document and I saw a copy of it and it's real, we own the thing. And apparently there have been 1 million mortgages or so where no one actually looked at it. And the reason they didn't look at it, it wasn't because no time, it's because they don't actually have the original document.
Can I ask you a real quick question?
Why?
Because I wrote a whole business plan around this, if anyone wants to see it, for a company in England called Loan Check. But when you do this collateralized debt obligations, you syndicate things and you slice them and dice them and you buy different things. Like you buy a percentage of interest rate or something, so nobody had the original document kept. And so therefore they have no chain of title if you go back to the original U.S. law, and therefore all these mortgages are fraudulent and people will get their houses for free.
Yeah, I don't think that's going to happen, but yeah, but that's the worry.
Wells Fargo said they're not going to abide by it. Wells Fargo said
yeah, a lot of banks have said.
Send me an email if you want to see the plan. It's all explained in excruciating detail.
On the other stuff that came out this week that's probably more relevant to this group, looks like online advertising, that's display mainly, grew about 13% this past quarter, which is really good for those of us in the online advertising business. But a stat here that I find interesting, back when I was at Idea Lab, the top 10 properties, the top 10 advertisers on the web generated around 65% of all the ad revenue. And today, that is 70%. So, think about how many hundreds of thousands of publishers there are, right, out on the web. And the thought that the top 10 properties still command now 70% of all the advertising.
As you look at the numbers, by the way, it's surprising to see if you take Microsoft's properties, because they break it down between MSN, Microsoft, Bing. If you combine them, they almost rival everything Google does.
Yeah, that's right.
And they're broken down to where it doesn't look like that Microsoft is a massive player on the online advertising side. Insane.
Yeah. Well, I've said that for a while. I mean, Microsoft, I think, is actually a pretty good company to own if they could shed some of their underperforming assets.
Unbelievable.
What it also says to me as a venture capitalist, that is, Jesus Christ, if your business model is internet advertising, that is a really, really tough business to make work, right? Mainly how all these small companies do it is they go through ad networks. The ad networks take their slice of the pie. What's left ultimately to the publisher just isn't enough to sustain a business. On Yahoo, right? So again, I assume a lot of you have been following this if you're in the media area. So Yahoo, rumor is that they may get acquired, and the reason for that is you see this now in a whole bunch of companies across the market. There are companies that if you take out a few assets, the rest of the company basically you can have for free. And that's really the case with Yahoo. They own some of the most prized assets on the web. They just happen to be in Asia, which by the way isn't a bad place to be.
Like Yahoo Japan.
Right. So if you look at it, Yahoo prior to all this hullabaloo was trading at about 14 bucks a share. If you look at their ownership in Alibaba, Alibaba.com, and Yahoo Japan, that's about $12 per share of value. And they have $3 in cash per share, so that's 15 bucks. Everything else they do, including that great Bing partnership, which I do think is very profitable, is for free. So this is why, as much as the buyout guys hate technology stocks, they're looking at it and saying, we can sell off those three pieces, take a dividend on the cash, and everything else, which could be worth $4, $5, $6 billion, we get for free. They'll sell it officially to Microsoft. That's the reason that company.
But isn't Yahoo Japan a totally different stock, tracking stock, different market?
It is.
It's on Nikkei.
Yeah, they're all totally different. Alibaba is different from the Alibaba group.
Right.
But you could actually look at Jack Ma at Alibaba wants his stock back. So someone with probably 6 months effort could shed all those assets and have the rest of Yahoo for free.
So, but Yahoo itself then, if it went to AOL, because we kind of joked around, it's like please don't take us wrong, this is when William and I are talking at 11 o'clock at night, it's like two retarded people